Somebody called her hair the Marcia Brady look,
Well,
but
it's
you
true,
know,
it's a thing.
it's a thing.
It's a thing.
So
We are live? No.
I know.
Yay,
Looks
there
like
we
we
go.
are now.
Happy Friday. I'm on the struggle bus today. But we're doing it. We're doing it anyways.
doing
No
it.
more excuses. They're like, no more excuses. We're not doing Finance Friday. Welcome to Finance Friday. We're starting to do these regularly again now. We are so excited that you're here. Ask any questions or comments down in the box below. This is a show where we give you the information that you need to help you create, grow, and protect your wealth. I am Amy Novakovich, and I'm a certified financial planner and a chartered retirement planning counselor. And then this is Beth.
Hi.
Back again.
Back again.
Yay.
Okay,
Are you
good.
trying to sell it?
I'm just trying to make sure that we're
Or share it? Did I say sell
Sell
it?
it.
Are you selling things right now?
not today.
Oh my gosh. Again, struggle bus right here. We're going to try to get through it. We're going to talk some current events today. There's some hot topics going on.
Right. So when we decided to bring this back, we wanted to make sure that we were talking about things that are important to you. So, and you'll hear things on social media or any sorts. Yeah. One of the things is we heard a lot about a bond sell-off internationally. Locally, they're kind of domestically, I guess you want to say, they're kind of hinting at a Fed rate cut, and then also Klarna. And if you don't know what Klarna is, you should know what Klarna is.
Yes, Klarna's like the new hot fintech.
Fintech, you got it.
Right? And so there's a lot of buzz about how do I make money in an IPO? Like there's a lot of people that will call here and just say, hey, I heard of this company. Newsmax was the last big one.
Oh, that's right.
That I got a lot of calls on. Like, should I buy into Newsmax? And Klarna's now the next one. It's going to be approximately 1.2 billion, 1.3 billion. It's a big one.
Huge.
It's
huge.
So what does that mean for you and how can you make money if it's right for you? Again, now on these Finance Fridays, here's my disclosure, right? These are not recommendations. Please do not run out and just say, Amy told me to put all my money in Newsmax stock.
I don't think you've ever said that.
No.
Ever, but still.
No. But people will take words and twist them. So these are not recommendations. However, we are happy to discuss when it might be appropriate and for the type of person it might be appropriate for. Right. And in those instances, when would it make sense? You can share that like on your personal profile, like right now.
I can.
Yeah, share this out, guys, because again, we have so many resources on our YouTube channel that I used to do like topics
like
about
videos.
Finance. Yeah, about different topics in finance. And actually I was just talking to a couple of moms last night, and there are people that want to know more about, they want to be more educated, but they don't want to sit and watch CNBC 12 hours a day.
Right.
So I felt like bringing this back is good, because for those that can't just sit and watch CNBC and then chat GPT everything, it's like, no, I want to know about current events so I can have a conversation and I can start to understand, but maybe in a more entertaining manner, hopefully. So, see, look, so I can share it.
Yeah, go ahead.
I just shared it. Cool. Yay! So yes, go ahead and do that. Okay, so let's start with Klarna's kind of a fun one, so maybe we'll save that. So bond sell-off.
That's not a very
bonds
fun
are
one,
not as sexy. However, the bond market is a huge market that people are like not super focused on, mostly focused on the stock market. But bonds are just credit. So big companies don't go to a bank and say, hey, can I have a $40 billion loan? Like, no, they issue bonds. And so each of us get to buy a chunk of a loan, right? And then in exchange for that, in exchange for your money, they pay you an interest rate. Simple?
Simple
enough, right? Remember when I did my courses?
Yes, you did a great job with.
I don't know. What did we ever do with those?
You've got them.
I got them somewhere.
I'll bring them back. Don't worry.
Okay, we got courses. But anyway, I try to break things down really super simplistic, and then we'll get more complicated, so because there's all different people on the spectrum of education. So that's a bond. Now, people make money by buying bonds very slowly. Like, okay, it pays me a 5% interest rate per year. So usually that's like the safety part of the portfolio, right? Well, when there's a bond sell-off, that simply means that bonds are issued initially for $1,000 in general when they're originally put out. I'm not talking about the I bonds and the EE bonds that you buy for your grandkids at $50. That's not what I'm talking about.
No, we're not.
I'm talking about corporate bonds or even treasury bonds, which are just through the government. So there's corporate bonds through companies and government bonds. Now, when there's a sell-off, that just simply means that prices are dropping, not the rates are dropping. That's a big misconception. People are like, rates are going to go down because there's a sell-off. No,
nope,
that's not what that means. Because it's getting confused with the Fed rate cut right now. Check your internet connection. I think I've gotten that before in here.
Yeah, we're good.
It's fine. And so you can make money by buying bonds when their prices go low, and then the interest rate is actually higher. You know, like if I calculate it, for instance, if I put in $1,000 into a 5% bond, that's going to pay me $50, 5%, quick math, right? In a year. But if I only pay $800 for that bond because it's on sale, because there's a bond sell-off, I'm now earning 6.25%.
We like sales.
Right? So this is a way that your advisors, hopefully, are mixing this type of thing in. Same thing with preferred stock. So when the financial crash happened, we picked up some huge like bonds that are down and preferred stock that are down, very similar. We can talk about preferred stock a different day, but they're similar. But you buy them on sale and then your yield or your interest is then higher, which is super fun.
So what does that mean for people if they're worried? They see this bond sell off. Does that indicate things are good or bad or indifferent?
That's a great question.
What's it mean?
Depends on why the bonds are selling off. So, I mean, I think right now everybody is constantly talking about tariffs, a credit crunch, a market slowdown.
Right.
There's actually several reasons that they're throwing around this huge bond sell off, right? So, I think in the case of like 2008, it was scary because if your corporation goes under, right? Just like if you owe somebody money, a credit card company, and you file bankruptcy, they don't get their money.
They don't get paid.
So in a bond, you start to fear that credit is crunching, right? Oh,
I'm watching her.
are we having any? Okay.
No. I'm watching to see if
So
people
you
are
start to
crunching.
fear that your money is just going to blow up and be gone.
Right.
That's why there's a rating system. You know how we have credit ratings?
Right.
Bonds have ratings.
Bonds
as
have
well.
ratings, right.
Right. So what does it mean for your money if you're holding bonds? Well, you should evaluate them, especially if they're individual bonds. Like, could the corporation go under? Not super likely, but it could. Or do you own a fund of bonds? So there's bond funds, mutual funds, ETFs, that are just a compilation of a bunch of different bonds, a giant bond ladder, if you will. And they all come due at different times, and they're with all different companies, so you really shouldn't worry. If anything, you should talk about possibly buying more. Oh, am I messing my microphone
You
up?
might be. Keep doing that,
Ooh,
Amy.
Sorry. I have this bad habit of playing with my hair. Ooh, no, that's not.
That's what happens when we have long hair. That's what happens.
Yeah, the Marsha Brady look. I'm
Okay.
telling you, I gotta get a haircut. That's bad. Okay, so anyway, so if you are currently holding bonds, which if you're younger, you're usually more aggressive. Again, not recommendations, don't run out and do this, but you're usually more aggressive and usually wouldn't actually hold bonds. But this is for your people that are pulling income, living on their retirement portfolios, or just parking the money until you buy when the market is down. Maybe you're a more active person and you like to buy when the market is down and then take gains when the market is high. So you park the money in bonds until the market drops, which is what we do for a lot of people actually here, and take advantage of the market dip. We park it in bonds until the market dips and then use that money to buy on the dip, which helps make money, right?
Perfect.
So that's number one. That's the whole bond sell-off topic.
Yeah, the second part of that, so that's an international thing happening right now. What's happening stateside is they're actually talking about, they're hinting that the Fed might cut rates, which would be the first time since December of 2024.
Yeah, so when they cut rates, again, that's not like making a bond sell-off. So it's two separate things. So if the Fed cuts rates, what does that mean for you? That means your equity line rates will go down. Your credit card rates will go down.
Okay. That's good news.
Yeah. Now, banks nowadays are more driven by competition than they are the Fed funds rate or the prime rate. You know, they're not needing to borrow to meet their overnight cash obligations anymore.
Okay.
All these banks are keeping cash, right? So it's more about competition. So if you have like credit unions are usually pretty aggressive on their rates because they want to bring in that money, they want to bring in the cash. So a rate cut is more for people in debt, I would say. And then also stocks typically, historically, respond very well to rate cuts. So if you're one of those people keeping money on the sidelines because you're like, the market's high, I don't want to buy right now, you might want to give us a call. I say your current advisor, but really if you're not getting the advice or they're not putting this video out there, maybe you do.
Right.
Maybe you need a second opinion. So give us a call and we can maybe explain to you why it might be a good time to reevaluate your portfolio if rates do get cut. If they cut by a half a point, not super likely. The market will love that. super, super happy. Stocks will go up.
All right.
So we want to take a look at that, definitely. But yes, thank you for bringing that up because that's a very hot thing. That's September 16th,
Yes,
I believe,
that's
is
coming
when
up.
they're going to announce it.
And on September 2nd, Klarna announced that they're looking to go
Look,
public.
we're already at 10 minutes.
I know.
We're going to talk about one more
Listen.
thing and then we're done.
Yeah,
Like,
so
see, it goes by so fast.
If you've never used Klarna before, I'm sorry.
I'm sorry, I'm ADHD. I'm like, woo, squirrel.
Why she had
That,
me.
yes.
So if you've never used Klarna before, what I liked about it is it's actually how I bought, don't hate, designer shoes that were.
I thought you bought designer shoes on Poshmark.
I did that too.
Yeah.
But the ones I bought for my wedding, I did not.
Oh, I see.
So Klarna allowed me to break it up over 4 payments. So I was able to do it when I got
why don't
paid.
you explain to people what Klarna is?
So
They may not know.
Klarna is like a buy now pay later sort of thing. It's kind of like the old school Christmas club, so to speak. You're allowed to buy something and they take the payments out over a specific
And a lot
period
of
time.
companies are doing this, by the way.
Mhm.
Like PayPal has their own.
Yes, they do.
Like
PayPal does
buy
it.
now, pay later.
Does Google pay
There's,
as well?
I think so. Google Pay, and then
Okay.
I think there's one more big one that I'm missing.
Yeah, I'm thinking of it too. It'll
Anyway,
come to me at
doesn't
3 in the
matter.
morning.
But the point is Klarna is the one that's taking their stock public. And what does that mean for you? That
Yeah.
means that if you wanted to buy into a company, like remember when Facebook went IPO, and
remember when Uber
went IPO.
remember Uber.
Like you get in at these early levels, right? And then the idea is you obviously think the stock is going to go up or do well. Newsmax, again, another one. So you get in at the early levels. I think they're going to issue it, they said, between $35 and $37 a share.
Okay.
So like let's say you bought in at $35 a share and then the day it goes public, which means the day that like the public can buy it, it goes on a stock exchange.
Goes on New York Stock.
And it goes up to $70 a share. So and I don't know that, right? It could go down to $15 a share. But that's what the hope is that you get in early and then all the hype around a fun IPO and it's like, yay, and now we can buy it and we don't have to be a private investor with millions of dollars. We can just go buy, a couple shares for $140 a share and now it's public.
Right.
And so that's a different feel. The company is supposedly going to be worth around 14 billion.
Yeah, it's crazy.
So it will immediately be a small cap stock. No, that's not true. Mid cap. They bumped up all the levels, since like it used to be large cap, mid caps. Now it's like mega cap,
Yeah, I'm
large caps. I think that's technically middle of the road now. So you would have the opportunity to own this stock early on. Now we cannot buy in pre
right.
IPO. We can buy in like the day of, but in order to get in on an IPO, you have to go with the people that are issuing the IPO. So companies like JP Morgan and Goldman Sachs, I believe, are the two main financials on this IPO. So you have to go through them if you're wanting to buy shares. Newsmax just did it themselves. I'm not really sure. Also, Angel Studios, I only know this because it's a Christian thing. But Angel Studios is raising money right now. Very, very small, like 35 million. Like it's not a lot of money. But they're doing it on their own. Like they're doing it through their own. I forget the company they're using.
Interesting.
It's probably some SPAC company or something that's trying to help them go public. But typically, when there's these huge IPOs, you have to go through the financial firm that is issuing it. So we cannot do that, but when it goes public, then we can hop on that train and buy it. And again, the idea is that it goes up, 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 up over time, and everybody has fun making money.
So those are the 3 topics is what I wanted to say, but it's
What was
also
the 3 topics.
Oh, yeah.
The interest rate.
Yeah, we said that the
The
global market,
the Fed rate.
Fed rate, and Klarna.
Klarna.
Yeah. So with any of these 2, if your advisor does not return your call or is unavailable,
Sometimes it's tough for them to get to all the calls.
it can be tough for them to get to all the calls, for sure. However,
Oh, sugar is high. I'm getting a high sugar. I wasn't being rude.
okay.
I'm getting a high sugar notification.
I got mine at 3 o'clock this morning.
Yeah, she's got a type 2 diabetic. We got type 1 diabetic. Beep, beep, beep,
Beep,
beep,
beep,
beep, beep.
I was like, is
Beep,
that
beep,
your sugar
low,
alarm or
beep,
mine?
beep, beep. Yeah, anyway, sorry.
So, always important to seek your advisor, whoever is helping you with your investments. There's also a difference between an investment manager and a financial manager. So just make sure that sometimes when you're reaching out, they might not be able to give you the information that you need because they do investments, they don't do your finances. There's 2 different things. Which I also wanted to bring up that we're a vibe here at Nova Wealth Management. Even we started as a smaller company. Like I was here in the beginning, but
Almost.
almost. If you are currently in the finance industry and we feel like a good fit for you, give us a call. We would like to talk to
because
you.
we are growing.
We are
would
always
love
growing.
To talk to you.
So
Yes, and we are right at that 15-minute mark.
we're gonna
Good
be here.
job.
We're gonna be here every Friday.
Yay.
Maybe I didn't even expect to be on, but I was like, oh hey Amy, I'll join
Well,
you.
I did have some good feedback after our last Finance Friday about, yes, we're going to be talking about current events. Again, we're always happy to talk about financial planning topics. If you want to
Correct.
hear a specific planning topic or anything that you should be doing right now for yourself planning, we're happy to either talk to you or direct you to one of our videos. I usually like to talk to you, but happy to still talk about that. But I feel like the current events is always like the hot thing. Like, how can I make money on this? Like, what's an IPO? How can I make money on this? And how can I educate myself so I can have a conversation with someone? So we will keep doing this on Fridays.
Yes. So thanks again for joining us. We appreciate any time you want to share this out so that your friends or family or anybody else on social media is aware of what we're doing. So
Yay.
have a great
Weekend.
rest of your day. We appreciate your time. Bye now.
Bye.
Let me get this off here. Ooh, come on now.